Welcome to Nasdaq TradeTalks. I'm your host, Jill Malandrino, Global Markets Reporter at Nasdaq. We're coming to you live from Mainnet 2024 by Masari. Joining me for this segment, we have Lasse Clausen. He is founding partner of 1KX, and we're here to discuss the crypto venture market and mainstream use cases. It is great to have you with us, Lasse. Welcome to TradeTalks.
Thank you for having me.
All right, let's talk about the current state of the crypto venture market. What looks attractive?
Generally speaking, this is for us, in our view, crypto is a long-term fundamental technology play. We invest like a venture capital fund. We are venture capitalists, and so we generally advise to take a very long-term view, which is not always easy because there's a lot of excitement with prices going up, and it is between $1 trillion to $3 trillion market cap, and I think sometimes expectations might get a little inflated, and people are expecting sort of everyone's grandmother to use this every day.
Yeah.
And I would just say that we're not quite there yet. There's still some sort of infrastructure things that need to be built. For example, as long as you need to sign up for any crypto app and you have to back up a seed phrase and send ETH to a wallet to pay for gas, I think as long as we have these sort of complications, it's a little early to expect sort of very big mainstream use cases.
Right. Well, I mean, at the end of the day, what is it, 13 years old, the asset class? It's still really young, so you're looking to invest longer term more around the market infrastructure side of crypto.
Right. So in the early days, we've invested sort of in the very, very low level infrastructure, such as, layer 1 blockchains. We're now coming up the stack, sort of where you have scaling solutions such as layer 2, blockchains. And to give you a reference, we started investing in that in 2018. Mm-hmm. So this sort of really, multi-year kind of time frames, and that already has worked fantastically. So we've come from, peak, which was mainly on these layer 1 blockchains, was around 30 million users, monthly active wallets. We're now at 130 million active blockchain wallets. So we can start seeing that we are slowly getting towards mainstream usage. In Q1, stablecoins did more transaction volume than Visa, MasterCard, and PayPal combined. So we're starting to poke into some mainstream use cases, but we're just not 100% there yet.
Well, I mean, when you think about it, there are billions of people around the world that transact using stable coins. That's how they're growing their economies locally. That's how they're trying to mitigate inflation, which a lot of developing economies, that is a risk. So I mean, we tend to think very Western-centric sometimes, but these use cases are being practically applied in other areas of the world.
That's right, and I think the latest number I have, we're around 550 million crypto users globally. That's a very serious number. Another way to look at it is also that people have spent, I think now $36 billion in blockchain transaction fees to date, right? So that's a very, very serious market. It's very large. We have around $6 trillion of trading volume of on-chain exchanges, billions of dollars paid in transaction fees, in trading fees. And so we're starting to really hit some very serious numbers. But yes, it tends to be not so omnipresent here in the West that everybody's using it everywhere, but it's a very global phenomenon.
It is. Well, one of the arguments that you hear are there's no fundamentals. How do you analyze a particular crypto asset? So what should people know when it comes to looking at fundamentals, when you're looking at an opportunity, when you're looking at a project? How would you analyze before making an investment into one of these areas?
So just a heads up, it's not investment advice, but the fantastic thing about this technology is when it is really blockchain, when it is really open source, is that you're not relying on some accountant or some team giving you some books and you have to trust them, right? This was a problem, for example, with WeWork, etc., that it turns out many years later that the numbers actually weren't what they are. Here, you have irrefutable numbers that are on-chain, right? You just look at a block explorer, which is a different party just reading data from the blockchain, something like June, something like Covalent, that really gives you undoubtedly the truth, the real numbers of what activity is happening with this protocol, let's say, that you're looking at maybe investing. And so what I recommend is really just looking at on-chain data of how much traction does this have. And again, the great thing here is it can't be fake. And so that's really the fundamental approach, is to see how many people are using this, how many wallets are using this, what is the value that is flowing through these contracts, what is the trading volume, what is the exchange volume, what is the transaction volume, how many wallets are using it, how frequently, etc. So really pretty basic fundamental
Right.
analysis, but again, you have real truth here. It can't be faked by an accountant or by a
And
team.
that's what I wanted to ask you, how you would equate it to something, let's call it traditional equity analysis. When you look at, does cash flow look good, or debt levels low, are sales growing each year? So you would look at a crypto investment through that lens to a certain extent.
Absolutely. So you look at fundamentals, but the great thing is you don't even need to get in touch with a team and rely on them to show you the numbers that they want you to see. You just go to, Etherscan, you go to the Block Explorer, you go to Dune, you go to Covalent. All these third-party tools that query data from the blockchain itself make it easier to look at it, and then you can, you really are able to inform yourself to the most true extent possible without even relying on the team giving you any data.
So let me ask it in a different way. For someone who is not fluent in the world of crypto, what would be a positive attribute in terms of fundamentals? If you're seeing users grow by so much, X each year, what would be a data point that you're looking for that is encouraging in an investment?
Yeah, so you have, for example, number of wallets that are transacting
Right.
with this protocol. Is that growing? Is the frequency of that growing? And then what is the value in that protocol? How much money are people trusting it with? Easily runs into the billions in this space very quickly. Another important thing I think is to look at basically volume of money. Is the money moving through this protocol? Is the core sort of transaction value proposition, is that being used a lot? Is that growing?
So there's a big difference. If you can have 100 million wallets, but if no one is active in them, it's just a stat that's not showing any growth.
Right,
Yeah.
and so for example, there was, in the earlier days, it was about transaction volume, sort of, or, how many blockchain transactions are happening on this chain. But if it's a blockchain where it's very, very cheap, maybe someone else is trading by themselves. Whereas if you have a blockchain, or you rather look at the actual amount of money that people are spending on transacting on this blockchain, that also gives you a very, very good idea about the fundamentals, that maybe you have a chain that's not the cheapest to transact with, but it has better security properties, it has more network effects, and people are spending hundreds of millions, maybe billions a year to use a transaction service off this blockchain. That's a pretty, that's a fundamental value that's harder to fake. Yeah.
All right, appreciate the insight. Thanks for joining us on Trade Talks, and thanks for joining me from Mainnet. I'm Jill Malandrino, Global Markets Reporter at Nasdaq.